The last few months have been absolutely insane for both traders and firms. MetaTrader cut off a whole bunch of brokers out of nowhere. This forced prop firms to find a solution to move to new platforms. Us at Lark Funding, we quickly moved over to DX Trade, which now has a very nice TradingView integration. But all that to say, it has been absolutely wild. And that's not even to mention all of the US traders that were temporarily or permanently banned by several firms. All that to say, it has been crazy. But unfortunately, it doesn't look like the craziness is over just yet. No, it doesn't take very much time to scroll through social media, specifically Twitter, to see that a whole bunch of firms have been denying payouts. Either they've been flat out denying them or they've been delaying them, and it is just a mess for traders. So rather than hide from this, I think that this is an important discussion to have. Rather than leave traders in the dark, I think traders need to know what is going on with both individual companies and the situation as a whole. Now, it is not our job to speak specifically on firms. I want to make that super clear. We're going to do our best not to speak against specific firms because we don't know how they operate. We don't know what their situation is, and we don't know what they're going through. We ourselves are not perfect. No, we have not denied a payout in over 650 days of operating, but of course, we make mistakes and firms make mistakes, and I am a very firm believer that competition makes the industry better as a whole. So all that to say, traders at the end of the day are the ones that are impacted the most, and we hope that every single situation with every trader and every firm gets sorted out. But with that being said, let's take a look at why firms are denying payouts. As I said, it doesn't take long to scroll through Twitter to see a whole bunch of complaints about firms, whether that is not receiving a payout, not receiving a refund as promised, not hearing back from support, getting banned on Discord. We'll even put up a whole bunch of Trustpilot reviews that don't take long to find to show that we are not just saying this. Things don't look great for a lot of firms and for a lot of traders. But the question is, why is this happening? I think a lot of traders have the vibe online that firms are greedy and they don't just want to pay out traders. And while I'm sure that is sometimes the case for certain firms, again, we don't know how they operate, but it's human nature to be greedy. I think there's actually a lot more going on to that. At the end of the day, payout denials are bad for business. Reputation is everything to a firm. And so why would a firm actually be denying payouts if it's going to hurt their reputation? And I think overall, it just comes down to one thing, and that is unsustainable rules. When we launched back on June 1st of 2022, we didn't come out with the easiest challenge. We didn't come out with the cheapest challenge. In fact, we have a couple of rules that many traders don't like, more specifically our lock upon payout rule. Now, in our eyes, based on experience that we've had with funded traders, we don't think that this is a big deal. We have had many traders go on to receive 4 and 5 figure payouts, multiple 4 and 5 figure payouts on the exact same account, simply because they waited an extra 1 or 2 weeks to request a payout. They left a buffer and then they continued trading it. Now, we have said from the very beginning that this allows us to better utilize a trader's data. But there seems to be a disconnect online between traders wanting firms to actually be sustainable and having easy, affordable, and cheap challenges. All that to say, this boils down to unsustainable rules. There's a whole host of them that you can find online amongst different firms that are fantastic for the trader, but they pose a huge risk to the firm, both short and long term. Several examples of these are offering 200-to-1 leverage, offering 100% payout splits, most importantly, allowing gamblers. And then there's also challenges that just seem too good to be true, too easy to pass. That would be a 10% maximum drawdown limit with a 5% target, for example. All of these things combined, along with the incredible competition that we have in the space and firms racing to the bottom on price, this has created a difficult situation for a lot of firms that are trying to attract traders, but are maybe thinking more short term rather than the long-term sustainability of the platform. This brings us to the funded trader. Now, again, our job is not to speak ill or badly on any specific firm. We hope that the situation resolves itself for both traders and the funded trader. Again, competition makes everyone better. However, the funded trader did put something out publicly, and so this is not us speaking on hearsay or just guessing. Specifically, the funded trader recently put a post out in their community update saying that they did reject roughly $2 million in payouts in January and February combined. More specifically, in January, they denied $1.375 million in payouts, and in February, they denied $772,000. They said that these rejections were due to failed KYC, fraud, and a legitimate breach of rules. Now, if that is the case, then of course, there's no problem with that whatsoever. If a rule is clearly outlined and is breached, then that's a breach. If there's fraud, then that's the end of the story. It's fraud and you can't move forward with that client. And if there's a failed KYC from a legal perspective, it is also incredibly important and mandatory to conduct your proper KYC. So if this is accurate, then they could have denied, or any firm could deny, $100 million in payouts if they all fall under one of those three categories. But unfortunately, based on the reviews and comments online, that might not necessarily be the case. All that to say, we do hope that this gets resolved for both the funded trader and traders, because again, at the end of the day, that's $2 million in payouts. Imagine, I don't know how many traders are involved, but that is life-changing amounts of money. Moving on though, even more importantly is, well, how can traders deal with this? How can traders navigate this situation? And I think it falls down to a balancing act. It's a lot like a seesaw. Traders and both firms need to work together to find a solution that is actually sustainable. 200-to-1 leverage is not sustainable. And out of everything that I've mentioned, I think the most important thing is that gamblers cannot be allowed. There is a huge difference between being a trader and being a gambler. I have been very forthcoming and very vocal about what I deem as gambling and what I deem as trading. Listen, if you are going to breach the daily drawdown or the maximum drawdown limit on a single trade, that is gambling. But if you're risking 0.5% per trade, you're consistently making returns, there's no risk of you breaching the account drawdown limits within a trade or a day. That sounds a lot more like in line with trading rather than gambling. Here's the deal. Sustainability is not the flashiest. The flashiest and loudest firm out there, while I don't have a specific one in mind, is likely flashy and loud because they're offering something fantastic. But as always in life, if something sounds too good to be true, it most likely is. So if a challenge is incredibly cheap, if a challenge is incredibly easy, you have to ask yourself, what is the potential sustainability in that? While it might be great for a month, 6 months, a year, 2 years, as we're starting to see eventually, when things aren't going as well, that unsustainability will start to creep in. Some cracks in the foundation could appear. My overall point here is that I think the solution lies in a balancing act between what firms are offering and what traders are willing to accept. If firms think more long-term and along the lines of sustainability, and if traders aren't looking for just the cheapest challenge or the easiest challenge, but are willing to go with a firm that is trusted, that they know they can rely on, I think that is where the sweet spot can be found, and we can avoid a whole bunch of these issues that we are now seeing. As I said, Lark funding is not perfect, but we are proud to say that since we launched on June 1st, 2022, and over 650 days ago, we have never denied a single payout. Now, that's not to say that we won't ever. Listen, if a trader breaches a clear rule, then that's a breach and a payout won't be offered. But we think we have some of the most forthcoming and clearly outlined rules on our platform. We don't hide anything whatsoever, and we really pride ourselves on transparency. So again, we're not perfect. I don't think any firm in the space is perfect, but being open and being transparent and having an open willingness to work on any issues or conflicts or, just weak spots, I think is really the key here. All that to say, if you are a trader out there struggling, we hope that your issue gets resolved. We hope the industry as a whole improves over time, gets healthier, because really this is still the best opportunity there is for traders in the entire world. I am so adamant on that. I started trading back in 2016 trying to flip small accounts, and the opportunity that these evaluation firms offer is just next level, and there's nothing that even comes as a close second. If you made it this far, I appreciate it. We will see you in the next one, and until then, peace.